As we lead up to and into retirement, we all want to pay less tax, and part of that strategy could be implementing the use of a trust. Now, in this video, we're going to cover off what is a trust, when does a trust make sense to use, and how do you get started? How do you actually set up a trust and roll assets into there and get that process started? So we're going to cover that in this video, and I've brought in Michael Barrichello, who's one of the CFP professionals on our team, to share his insight, experience, and thoughts around trust and when it makes sense for you. So let's welcome Michael to the channel.
So Michael, thanks so much for joining us again. Good to have you back on the channel. Today we're talking about trust, which a lot of people are asking about. So trust for estate planning, spousal trust, that kind of stuff. So my first question for you around trust is, when would a trust be useful in overall kind of estate planning? And maybe give 2 or 3 examples where it might make sense.
Sure. Well, first of all, thanks again, Adam, for having me on, and pleasure to help out. First, let's maybe differentiate between like 2 types of trust. So one, we've got an inter vivos trust. And so people may have heard about that one. They're probably less common in estate planning because estates usually when we die, right? But from an inter vivo standpoint, that's created while we're living. So popular ones for that, maybe for business owners who have family members that where they want to pass it on to. In some provinces, most provinces, there's some planning for disabled children, and you may want to create those trusts in advance because especially if you've got a large amount of assets. And then creditor protection is another big one. So the government threw out some rules, some changes to trusts and split income, and it took away some of the tax advantages, but there's still a lot of good reasons to use a trust. The second one is a testamentary trust, and just like it says, testament. So when we die, that is when it's created, and usually through our will or it's a separate document. So, most of us who have young children, minor children, it'll say, if something happens to me and my spouse, then we want to distribute the assets or the residue of the estate over 15 years, right? Maybe 20% when they're 20 and then 25 and 30, et cetera. So essentially in that case, you're already creating a trust. I think what we're probably talking about is more of a formal trust. And so you mentioned a spousal trust, or some people may call a different one a spendthrift trust. So let's say you've got a 20-year-old child who's maybe not very good with money, or maybe there were some addiction issues. And if they had all that money, they're really scared about what would happen. Well, you can create these trusts where, again, we're creating an allowance for that individual. So whether the individual is a child or perhaps a spouse that's wasn't handling the money, wasn't used to handling the money, doesn't want to handle the money, doesn't know who to trust, right? So you can kind of take care of that for you. You can leave your team intact, and they can just distribute money on an even basis. Something that's even becoming a lot popular, and I'm assuming in Ontario and British Columbia, where we've seen cottages rise in value tremendously over years, is using a trust for a cottage. So, in the old days, the cottage could get passed on to the kids, and maybe it wasn't that big of an increase in value, but now we know that those have, double, triple, quadrupled over 20, 30 years, depending on where you are. And the kids don't necessarily either have the time or the money or both to be able to enjoy them or want them. So maybe one out of the 3 kids does, and the other 2 don't. So what you can do with a trust is you can say, look, we're going to put the cottage into a trust. We're going to put a $50,000, $100,000 into the trust, and that's going to take care of all the maintenance for 5 years. At the end of 5 years, if any of you want it, make an offer. You can put a formula in there that says, take the average of the 3 appraisals and discount it by 10% or something, right? Like you can be creative, and this is where the lawyers come in. But that's something that's being done more and more now. So it's giving the family or the heirs a chance to prepare for that, have those discussions, and it's not at least done, just at the date of death and, oh my gosh, we got to make a decision on something that's been in the family for 40 years and we have to do that real soon, right?
Yeah.
So,
Yeah.
but I think those are some, unique situations, and obviously there's more, but those are some.
Mm-hmm. And one thing with the cottage, because we have that conversation a lot. A lot of people think, well, my cottage has gone from, $40,000 to, $4 million or what, somewhere in between, right? Like a large gain. I'm going to set up a trust and shove it in there and avoid the taxes on it. And it's like, trusts don't avoid taxes, right? I think that's where the people might get confused. It's like, no, the trust isn't there to like shove it into and they'll never pay the tax on the gain. We can just let it go on for a million years. It's more of a no, the tax is going to have to be due, but it's just structure, especially multi-generational, gifting beyond. Again, if you pass one cottage to three kids and then they each have three kids, like how many owners do you want in there? It's a simplified way to kind of keep it in the family. So next question is there an asset threshold where trusts make more sense?
Again, I think going back to that first example where you have the minor children and you've left some money, again, depending on the volume, but you could name your brother, you could name somebody that you trust just to be the trustee, right? And follow your wishes. Typically, if you're going to get an institution, a firm involved, the trust company to handle these things, then yeah, you're talking about several $100,000. I know going back 6 or 7 years ago, I'd heard 300,000 was kind of the minimum with a lot of these companies. So I would assume it's at least at that mark, probably a little bit higher.
Mhm.
So dollar value is one reason, and then again, situation dictates, right? Because even if it's less than that, but it's really important that you get something done. Again, it could be for that disabled child, right? It's important to make sure that those trusts are done correctly because they could lose government funding, right? Provincial funding, if it's not done and the inheritance is received directly. So in that case, I think the money becomes less of an issue where it's more getting it set up properly in the first place.
And a lot of times people think trust is like, trust fund baby, right? Like someone that, their parents or grandparents or great grandparents had hundreds of millions of dollars and,
Right.
they're a beneficiary of this and they get their $100,000 a year just for, having the last name Smith. So, and I get asked this a lot, like, Adam, I have these assets, like, does it make sense to have a trust and put the money in a trust and like kind of shelter this ongoing for generations? And so I'll answer that on here. And this comes from my accountant and many accountants I've talked to is typically when you talk about like, as a family, you have a lot of wealth and you kind of want to like create some structure around that. Typically it's a $3 to $5 million asset mark where it starts to make sense to have the conversation. 10 million plus, yes, trust will probably start to make sense. So I'll leave that there. We won't jump into that too much there, but yeah, I know like on the, having kids and that, like, again, disability, it's more about structure. Like, what are you looking to do? What's your current situation? And would a trust help regardless of the assets you have going
Correct.
forward if something happened to you? That's really what you need to be looking at.
Yeah, no, and I would agree with you. Like when we talked back to that first example about the inter vivos trust, right, and setting it up for a business, that's exactly what you were referring to. You've got this, oodles of money, a tech company that's gone private, whatever. Not, you're now in a position to impact generational wealth.
Mhm.
Then yeah, absolutely, we're at a different level there. Yeah.
Yeah. And family trust used to be common before the tax changes not too long ago, the
Mhm.
Toasty rules. So yeah, we see them lingering around still, but definitely a lot less common for your average Canadian. Third question I have for you, Michael. Now, if someone thinks they need a trust as part of their estate plan, what's the first step to get started?
Yeah, and I think, Adam, one of the big things I used to talk about and still do if people bring it up is just draw out a flow chart. Like I know it sounds rudimentary, but in elementary school, we all used to have those little, well, hopefully you did, but I
Yeah.
think we did those
Yeah.
little stencils where you could draw triangles and circles and arrows and
Oh yeah.
like really like create like a bit of a flow chart that's going to show where the money is, how you want it to distribute, who's involved, and then that'll help you get your thoughts on paper. And we all know that if we can go to a law firm or see a legal advisor and at least take a little bit less time, then that's one way of being better prepared. But you
Mhm.
want to make sure that your investment advisor, insurance advisor, accountant, legal advisor, they're all on the same page because it's really that domino effect, right? Because everything starts to interact. So really, I think A, you need to get your thoughts down on paper, and then B, go see the professionals that are part of your team.
Yeah. Well, we had a client actually come through not too long ago, and part of their, I'll say, legal team said, "Ah, you need a trust in place for your situation." And so when we put together a plan, we looked at the trust. We also looked at a few other options for them, and we said, "You know what? I think the other options might make more sense. Here's why. Here's the numbers, structure, all of that." They brought it back to the legal team, and sure enough, like it made a lot more sense just based on their
Mm,
situation. Again, situational. That's where we're kind of looking at your professional team that you have on board, like get an opinion from all of them. Like here's the
right.
situation. What should I be doing? And you're not getting pitched some expensive legal thing or expensive accounting thing or insurance thing or investment thing. It's like let's get all the sounding board together and get consensus on it before pulling the trigger on anything.
Yeah, no, that's a great point because again, from a tax perspective, if you're creating a trust while you're living, it's another legal entity, it's another tax return, right? So there's some costs there. Insurance companies have different products that are in place that might be able to do what you want it to do without actually creating a trust, right? If it's just a matter of reducing probate or going directly to a beneficiary. So I would agree, you just need to get your team involved because somebody may have a solution that takes care of at least one part of it, rather than maybe going into an expensive trust option.
Exactly. And trusts are, you make a good point. Like they are expensive to file a trust return. You're anywhere between 1,500 and up to $5,000 potentially. And that's in today's, like that's only going up. And as our world changes, it becomes more complex. We have these bare trust rules, which could fall into the other trust issues. It's a bit of a rabbit hole that way. So it's good. It's good for people to understand that. Look at your situation, talk to your team, and make a sound decision from there. So
Yeah. And again, I think that's why it's important to know, like, why do you want it, and when would it take place? If it's only when you die, you don't need to set it up today.
yeah.
Right. So there's no reason to pay for that. Um, yeah, if there's no need for it today.
And it also gives your executor and your accountant and legal team after your death to make that decision. Like, does it make sense? And yeah, let's do it. And if not, then okay, let's just kind of bypass it too, right? So
Yep, correct.
anyway. Well, Michael, thank you so much for insight. Always good to have you on here, and we'll have you back on again soon.
Appreciate it, Adam. Thank you.
Okay.